Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We have Kevin Gordon and Ann Sonders together.
In the same
I didn't know they're in speaking
studio,
terms. It's amazing as it works out. We'll get to that in a moment. Red and green on the screen. We welcome all of you across your America, across Charles Schwab's America as well on YouTube. Subscribe to Bloomberg Podcast. Did you have a YouTube brief? We've sort of we've been passing in the night.
I know.
It's pretty amazing.
This internet thing's here to stay, I'm telling you.
It is. It's like this. It's not going away.
Exactly. So we'll take it.
We're good. Listen, do you have an ETF you're bringing out today? Everybody else is flogging a new ETF.
I am not flogging a new ETF.
Good, you can stay. Yeah. Okay, we're going to get to Charles Schwab here. Paul, your observation 2 days deep into the year.
Yeah, I think people trying to digest kind of what we learned over the weekend with some geopolitical risk, putting that on the front burner. But it seems like looking at the market action, folks are looking past it a little bit, at least at this point. And for somebody who's going down to Aruba in a few days, I'm paying attention to what's going on in Venezuela.
Seriously, it's like closer than Cuba to Miami.
They closed the
right?
airspace in the Caribbean Saturday. So people got stranded all through the Caribbean, not just the ABC Islands. So
this is special. We've done this a few times during the year, and with this quality, we can do it. Ann Sonders is definitive on Wall Street. Literally, her public service in allowing Americans to develop their 401ks is noted. A few years ago, she had to go out. She's on a college tour, and she's like talking to people that actually went to class. Mm-hmm. You show up at Pepperdine, and the thug walks in the room. How did you hire Kevin Gordon? Tell us about how you find someone that damn smart. How do you do
that
it?
question. So Schwab has a huge conference every year called Impact. A lot of Bloomberg folks come out, Carol and Tim, and they broadcast from there. Kevin's mom was in the business for
38 years.
38 years.
He's a Nebo baby?
Not in Schwab, but on a firm platformed with us. Yeah. And she brought Kevin to Impact when he was still at Pepperdine. And I met with him. And I was had conversations within Schwab about needing to build the bench. And I met with him, and I said, this is the guy. Nice. The only rub is he's still in college.
Yes,
can we wait? And the answer was, yes, we can wait.
What was your first day at Schwab like? You got hired by, she's 39, but she's a legend. Right. What was it like to be hired by Ann Sonders, who was iconic on Wall Street Week a few years ago?
I still pinch myself every day. It's a dream. We have a ton of fun. We work really hard. But it's but from day one, it's been this really fun, just sort of grind and figuring out how to make sense of all this. And at the end of the day, it's, can we make sense of the economy and the market?
Lizanne, sitting in your very seat earlier today, we had a gentleman come in and he has a new ETF and it's basically hedging. You can take all your Mag 7 stuff, all your stuff that's just ripped, do an exchange, put it into this ETF, and they're going to hedge it for you. Capture, top you out on the top, cover your bottom a little bit. I looked at Tom, I said, is that representative of how the market's thinking? Are investors that you talk to at Schwab, are they concerned that we've gone too far, too fast, and they'd like to hedge, or maybe they're asking, should I get out? What are those conversations like?
I would say that is a bit of the vibe. When I'm out on the road doing client events, I do get a lot of questions about how do I protect some of these gains, or how do I mitigate what might have been a concentration that developed in their own portfolios in a way other than having to trim positions, have the tax implications associated with it. Yeah, so there's a lot more generic lowercase h hedging questions that we're getting.
Kevin, Ann Sonders is too young to remember 87 or 98
I was there.
or into 07. What does a young stud like you do about worrying about the 30% down event we can't see coming?
Well, I think what's really interesting, I've spent a lot of time thinking about this in the post-pandemic world where, the Gen Z and the young millennial cohort of investors, for the most part, actually has not really experienced what I think of as a real bear market. Everything has been sort of conditioned on as soon as you fall into bear market territory, There will be some sort of stimulus or aid that comes in right away. And then you get this launch off of the bottom. You had that in 2020. You had that in 2025. Even in 2022, yes, the bear market was a little bit longer, but it wasn't that severe. It was 25% from peak to trough. So there has been this conditioning where, it's buy the dip and just keep holding on. And that's been sort of the right call. But I think that, moving forward, especially if there is going to be a little bit of a broader rotation outside of the mega caps, that is going to weigh a little bit more on index level returns.
Well, I'm going to give the younger crew major cred. They're way more serious about starting retirement earlier than we were.
100%.
Way more.
Absolutely.
Arista 74, worry about it in 2026.
There weren't even 401ks when I started working.
But I will say also getting pushed, though, into the market, and I think there is a desire to do so, which is good. But especially when you go down the age spectrum, there is a sense that the so-called American dream of housing is becoming sort of a lost opportunity. So it is pushing more people into the stock market, for better or worse. But
and
hopefully,
a view that traditional
more.
Retirement, even like Social Security, may not be available. Now, I think one of the rubs right now is the gambling mentality.
Yes.
And that's something we're at Schwab very focused on, is the differentiation between investing and gambling. One of the ways I think of it is investing is owning, gambling is hoping. And there is that blending of the trading and the gambling side. That is something that we worry a little bit about.
So, Lizanne, how do you set up the conversation here for just equity investors after we've had 3 years of double-digit returns? Very rare do we have a fourth one here, but how do you set up that conversation for 2026?
I think this could be a year where maybe index level gains are a bit more muted, but opportunity continuing to present itself outside of just the mega cap names. So, one of the things that happened last year, the market, air quotes around the market, is more than just a cohort like the Magnificent Seven. Big drivers until the latter part of the year in performance, but a lot of churn and rotation under the surface, sub-level bear markets in terms of maximum drawdown on a rotational basis. And I think that was one of the setups for this more recent environment of broader participation, action down the cap spectrum. And I think that has legs, maybe not in a linear fashion, but has legs this year.
Across the nation, from Pepperdine to the University of Delaware, Charles Schwab is with us today, Ann Sonders and Kevin Gordon. Decades of excellence from Ann Sonders. Kevin Gordon, he's a lot of work from home going on. And Ann
on the road all the time.
Did that as well. We welcome all of you on YouTube. Subscribe to Bloomberg Podcast. We're thunderstruck by our digital exercise. What are you doing to do the message digitally?
I mean, we've got a really strong presence on YouTube, and I think it's sort of an underappreciated, maybe underplayed, underknown aspect of Schwab's digital footprint. But also within social media, Lizanne and I, not to, I guess, I don't know, toot our own horns too much, but we try to be as active as possible across formerly Twitter, X, LinkedIn.
Kevin, do you make all the charts?
Not all of them.
Not all of them, but you don't want me making my own charts. Honestly. It's like, crayons and construction paper.
But it's been a good way to interact with people. And I think the more so these days, everybody wants those kind of shorter form, quick takes, but things that are meaningful too. You don't want, meaningless stuff.
Hey, Kevin, we are all patting ourselves on the back because the U.S. had a pretty good 2025 in terms of equity returns. Yeah. But boy, you go outside the U.S., even better. What are those conversations you have with your clients? Because quite frankly, I've never really thought about investing outside of the U.S. in my career. I'm sure some of my mutual funds somewhere have got me there, but are you having more and more of those conversations?
I'm just now recently starting to get, and I think probably the same for Lizanne, and we rarely speak at the same events. We're really kind of a divide and conquer crew when we travel. So, I'm just starting now to get questions about, hey, should I consider this? What does the opportunity look like? And that tends to happen. I mean, you get the big swings in performance first in favor of a certain asset class, whether it is international, and then the performance chasing tends to kick in, and then the flows start to move in that direction. So we found that it tends to work in maybe 3 year, with a 3 year lag, where it starts to kick in 3 years after international starts to outperform. It's not always the textbook case, but I have been starting to get more questions about that, especially because Lizanne mentioned earlier, there is a little bit more of a concern now about concentration in portfolios, specifically with tech and tech-like parts of the market, just by virtue of their size over the past 10 years. If you sort of set it and forget a portfolio over 10 years ago and didn't do much, tech and those parts of your portfolio have grown to an immense portion. So there has been more of a concern about how do I trim that and add into what might work better.
We've been joking that recommending international diversification has been about constantly saying, I'm sorry.
Yep.
And now it's you're welcome.
Yes, exactly.
Over the past
some
year
of the
or so.
returns, Europe, Asia, just extraordinary.
So-
Asia in particular.
Does it have legs, or is it just a dollar dynamic where they have a requirement of a weak dollar
Well,
to
maybe
continue it?
yes to both of those.
Yeah.
I think there's the currency dynamic, and that will probably be a function, or it will drive volatility and swings. So I think the international outperformance is probably not linear in nature, but for the most part, I think it has legs. If you look at the traditional fundamentals of the trajectory of earnings, that represents a support. A lot of, at least developed economies, don't have the same inflation problem with which the U.S. is still dealing, so it means a different monetary policy backdrop.
Liz, I have family members who have been hoping and enjoying losing money. Most of it are on BitDog and all that. These are the young Turks. They don't talk.
They're not in the triple leveraged all cash.
No, their parents are, but they go through vet bill to talk to me when they've lost that much money. How does someone who lost it hoping rebuild? How do they become an adult?
Boy, that's a good question. Sometimes the answers to questions like that are really boring. Which is
it's boring. With Tom Keene, it's always boring.
Investing should never be about a moment in time. Get in, get out. Neither of those are investing strategies. So where a strategy needs to be employed for somebody that maybe made that mistake and got out is don't try to time the get back in. Do it slowly. Develop a process over time. Dollar cost averaging. Again, the stuff that is fairly boring to talk about. I also use the analogy of a jigsaw puzzle, which I love doing jigsaw puzzles. And, you sort of pose the question, what's the most important piece? And usually people will say the last one or the corner or any of the side pieces. And we often say, it's the picture on the box. Try doing a complicated jigsaw puzzle without the picture on the box. That's the plan. So the first thing is actually have a plan. Too many investors, and not just young investors, but they're just sort of winging it. And have that actual plan and use that as the base for, okay, how do I get re-engaged?
And a lot of, I'm just going to use my household for young adults. It's all online. It's a lot of digital.
Yes.
And I'm like, who are you talking to? Who's giving you advice about allocation and things like that?
Well, I think that matters a lot more in the context of, the macro environment today is, it's quite precarious. It's unique relative to history. You look at just this year, in many ways, I think of it as being the year of the courts, not just from a tariff standpoint, but also from a Lisa Cook, a Fed independence and the integrity of the Fed and the structural, soundness of it moving forward in terms of making policy. All of that carries a lot of macro risk with it. But to hedge against that or to guard against that, you do need, to some extent, somebody to talk to, or at the very least, to Lizanne's point, having a plan to help safeguard against, especially with what's happened over the weekend. Yeah. So many questions, I was sort of fielding a ton from friends and family over the weekend about what does this mean for portfolios. But, often you get those kind of more panicky questions when it's somebody who hasn't done something, the sort of prep work, not to criticize, but that's why it matters a lot.
A wise one. Did you know where Guyana was in the map?
Well, yes, but only because
I did.
Only because I like geography and I'm a little obsessed.
Okay, well, I like it too, and I thought it was west of Columbia, which shows you what I know. Ann Sonders, Kevin Gordon with us. This is a special moment there with Charles Schwab, where the equity franchise has been noted. This is out on the left coast decades and decades ago, long before Ann got there. And it was Charles Schwab up in San Francisco building. Remember how original it was?
Yep.
It was like, you're kidding me.
Awesome.
And they're in San Francisco. They're not for real. And down in LA was Capital Group with Robert Kirby and John Lovelace and all that. And they put out these studies which said, if you miss the 10 biggest days, ready, folks? The jargon, the Kevin Gordon jargon is 500 beeps. You give up 5 percentage points of performance by missing the 10 biggest days in the year. Kevin Gordon, discuss.
Yes, and actually, a lot of those biggest days come in pretty significant volatility moments when you're in bear markets. And it happens, when you kind of feel that panic settle in and it's, oh my gosh, we're down X% from the top. Should I just get out and sell everything? And that's when, you tend to give up a lot of that future return because you get these, what Lizanne likes to call rip your face off rallies sometimes in the middle of these bear market moments. And it happened in April last year.
And not only that, but some of the biggest single up days immediately followed some of the single biggest down days, the rebound days.
And what's important here, folks, I'm talking to Kevin Gordon. I mean, Lizanne and I speak English.
Yeah.
It's a 4-box solution.
Yes.
You mentioned one of the boxes, which is you're out of the market, you got to get back in. The hard part is getting back in. It's wildly log normal.
But I'll say again, neither get in nor get out, if it's all or nothing, is an investing strategy. That's just gambling on moments in time. And I think that's one of the mistakes that investors make.
Lizanne, I'm going on 40 years in this business coming up in June. One of the biggest developments for me has been ETFs. I mean, the money flowing into those is just extraordinary. How does that factor into your discussion with clients?
Oh, yeah. And I think, we do a lot of work on investor sentiment and the buckets of attitudinal measures of sentiment, some of the traditional indicators like AAII, American Association, and Investors Intelligence, ones that I've been following since I started 40 years ago in this business. But there's the behavioral side of investor sentiment. And one key metric associated with that, fund flows. When I started in the business, it was all about mutual fund flows, traditional mutual fund flows. Now completely usurped in terms of what's going on with ETFs. And it is a really valuable way to kind of proxy the behavioral measure of investor sentiment.
2004. You were like 27 years old or something like that. I have a photo which is proof
40 years old.
of Liz Ann Sonders at the table with the Bush the Younger and the fiscal policy. Our fiscal policy now is way more moldy than it was in 2004. What should investors do? Should they worry about that?
So we get this question all the time. The number one theme of questions that I get at client events is around deficits and debt. And often it's followed by sort of an addendum to the question. What's the tipping point? Is there going to be some sort of crescendo? Is the dollar going to lose its reserve currency status? Are we going to default on our debt? Is China literally or figuratively going to wake up one day and decide to dump all treasuries? And we don't have those sort of draconian worries. There's no replacement for the dollar as the world's reserve currency. We are not going to default on our debt. China dumping treasuries en masse, they'd be aiming the guns squarely at their own economic foot. Now, they've been diversifying away from such a heavy weight in dollar-denominated securities, but that's been a 10-year process. That's not a recent thing. The biggest implication of a high and rising burden of debt, in addition to the interest costs associated with that, is it acts as a bit of a wet blanket on growth. It constrains growth. And that's not a new phenomenon. That's not a prospective phenomenon. That's a phenomenon we've been living with for quite some time, as are other countries that experience that same burden.
This has been wonderful. Liz Ann Sonders, Kevin Gordon, thank you, always and forever with Schwab. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Ricardo Hausmann is definitive on his Venezuela. Ricardo, I want to go back before your acclaim at Harvard, before your public service decades ago to your Venezuela. How did the Hausmann family get from a World War II Europe over to Venezuela? How did your family emigrate to Venezuela a lifetime ago?
Well, a Jewish family. My father, they both went through the Holocaust. My father lost both his parents. He arrived at Venezuela at age 17 with he managed to get himself to Spain. And then everybody in Spain thought that Hitler was going to take over Spain. So he ended up with another relative in Venezuela. And my mother lived through the German occupation in Belgium. And she was freed by U.S. GIs in September 1944. She was living with a Catholic family in a village in the south of Belgium until they were liberated. She lived for over a year there after after, as you know, they got the papers to go to the train station in 1942. So that's how they ended up in Venezuela. And in Venezuela, they had they created a really, really nice life for themselves. And so when I grew up, Venezuela was this heaven, I had this image of Europe as this horrible place where my parents had come from.
Right. I look, Professor Hausmann, and again, this is part of the story, folks, from Venezuela to the tip of Argentina. Your Economist essay, written yesterday for Zany Minton Meadows, is absolutely scathing. You say the President of the United States is, quote, delusional. What does President Trump get wrong?
Well, he thinks that extracting oil from the ground is a technical issue. But extracting oil from the ground, if it was a technical issue, Venezuela would be a powerhouse. But the reason why oil production in Venezuela collapsed, as so many other things collapsed, is because oil is a long-term investment proposition. You have to part with a lot of money and wait until you get a cash flow to recover that money over a very long period of time. And in that long period of time, you have to be assured that you have some property rights that are going to be respected. And if he thinks that right now he's going to recover oil production because he's going to tell U.S. major companies to go out and part with billions of dollars in Venezuela in the context of an illegitimate government because Maduro stole an election, but this woman who's now president of Venezuela, she didn't even pretend to win an election. She was appointed by a guy who stole an election. And he's going to give concessions that have no approval in law by any National Assembly, that was elected by anybody. And you would expect that the moment they will go back to democracy, that any of those conditions are going to be respected by a new political majority. So I think that the democracy is not a goal to be put after economic recovery. Democracy is an instrument of economic recovery. It's the way of telling Venezuelans your rights will be protected. Go back and dream. Go back and
try to capture what you knew as a kid. Ricardo Hausmann with us of Harvard University, folks. We're thrilled that he could be with us. Shannon O'Neil coming up. We welcome all of you around the world. Please subscribe to YouTube. Paul and I humbled by the digital success this year. Paul Sweeney with Ricardo Hausmann.
Professor, do we know, or what can you tell us about what the average Venezuelan really on the ground wants from this government going forward? Or from any government?
Well, I mean, Venezuelans voted massively in favor of a change of direction, right? When they were allowed to have a primary that the government tried to prevent, well, Maria Corina Machado won with 90+% of the vote. When she was not allowed to run and she anointed somebody to run instead, they voted this guy won with a margin of 40 points, and he didn't win by more because they did not let us Venezuelans abroad vote, and they did not let 3 million young Venezuelans to register. Had that happened, we would have won with an even larger margin. So Venezuelans are unified politically in a new direction. If you allowed Venezuelans to choose, they would choose a very competitive legal framework for oil, and they would engineer an oil boom. We don't need American help to engineer an oil boom because the world is full of oil companies that would want to get back into Venezuela under the right conditions. And we have a political majority to create the right conditions. But this system that they have described right now, it's not workable. It's something that works on a day-to-day basis, that they're saying, well, we leave the same bad guys that were in power before, the guys who are indicted. I mean, the guys who are in the same indictment as Nicolas Maduro one is the Minister of Defense, and the other one is the Minister of the Internal Police. So it's the same guys who are there, and they pretend to say, well, we are going to tell them what to do, and they're going to do our bidding. But when they say our bidding, they think that they can get a recovery of Venezuela without empowering Venezuelan citizens with rights. That's not going to work.
Professor, do you think there's a scenario where the Trump administration can, in fact, exert control over this government? Like, I think they can?
Well, I mean, what they think they can is to say, either you do what I tell you or I kill you. Because I have drones, I don't want to put boots on the ground. I have drones, I have missiles, I can kill you. So you better do what we want. But
Ricardo, I don't mean to interrupt, Ricardo, but Paul nailed it with that question. What this is about is direct community violence, whether it's Cuba or Venezuela. I mean, President Trump and his advocates have to decide if they want to participate with people who are violent. How do you, in your Venezuela, how do we move forward to a constructive end? What's the Hausmann process in January, February, and March of this year?
Well, you want to empower the people who have strategic interests that are aligned with you. And that is all the Venezuelan Democrats. So this idea that you can do your thing without having to deal with the organized Venezuelan opposition that under enormously difficult situations was able to win an election
and win big.
You want to empower them to help you. You want a strategic alliance with them, but you don't want to hear this dismissive description of Maria Corina Machado as somebody who's not respected in Venezuela. I challenge you to mention somebody in the world who's more respected than Maria Corina Machado. Obviously, she's super respected in Venezuela. That's why she can win elections in Venezuela. Now, that's different from saying she has the command over troops.
We're going to have Shannon O'Neil with us, Professor Hausmann, but let me ask you this viscerally. This came up, Paul, last night at the dining room table. Where does the military of Venezuela fit in? I mean, if I look at the Philippines and the shift from Duterte to the younger Marcos, the military played a part there in stability. Is the military of your Venezuela stable or unstable?
The military of Venezuela is led by a narco-terrorist organization, and they're still in power. But below that, there's a lot of people who would be willing, who would want to go back to a more democratic regime under civilian rule. But they're not allowed to organize. They're being spied by the military secret police, and they're being put in prison. They're being tortured. So what we need, if Trump is going to demand something from Delcy Rodriguez, is that she deliver Diosdado Cabello, the head of the police, Vladimir Padrino, the Minister of Defense. Those are the heads of the cartel of the Suns, el cartel de los soles. They are the narco traffickers. They are now in charge of the country, and they are the ones who yesterday put in prison 12 journalists, so that the number of political prisoners in Venezuela is going up, not down. Okay, so you want to fix the country, you need to get rid of this leadership, this corrupt criminal leadership that is in control of the army, and to empower the bulk of the army to go back to civilian rule.
Paul, get one more question in here with Professor Hausmann.
Is there a scenario where the people of Venezuela rise up and force change?
I think that, everybody now is willing to give a line of credit because, we've tried so hard to get rid of Maduro and we weren't able to do it on our own. So everybody's very happy that the U.S. was able to get rid of Maduro. But they're hoping that this is the beginning of a good process. But, the statements of Trump after, at Mar-a-Lago and afterwards were extremely disempowering and concerning. They described a vision for the future that I do not think is going to work. And I don't think that Venezuelans are going to feel that that is the right frame.
Professor Hausmann, thank you so much for leading our coverage this morning. Ricardo Hausmann with the Kennedy School, Harvard, and of course, look to his piercing essay in The Economist. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Anticipated here, of course, with all the geopolitics and international relations put to the wayside to a Tuesday, Troy Gayeski, one of our first conversations of the year with Future Standard, is, well, one of the great charms of Troy Gayeski is you need to be in the market. I never hear you saying go to cash. Have you ever said go to cash?
Well, I think if you look historically, I honestly can't remember, Tom, because if you think of the post-GFC era, right, hoarding cash has typically been a losing bet. And initially, so much of that was driven by QE and money supply being pumped up. And even though you used to joke around about triple level cash, I don't know if you remember the triple.
What are you laughing about? I did it. And they took 180 basis points this year.
Yeah, levering cash at cash borrowing rates is a tough trade, but
really, thank you.
But putting cash to work, and we do think that's one of the biggest challenges for investors now is how do you put those massive cash hoards in money markets, savings accounts, et cetera, to work where it can meaningfully increase total return and income without taking uncomfortable levels of risk. And that's one of the key attributes of alternatives, as you know, whether it's private credit, private real estate lending, or even private equity, if you have more of a growth bent.
And I know you have a focus these days on private markets, private equity, private credit. How does an average investor, what's the best way to get exposure to that asset class?
Yeah, so the way the industry's evolved, right, is we've democratized it to some extent. So it used to be really all about large sovereign wealth funds or large pension funds or endowments. And so we've created these evergreen vehicles, which are registered investment corporations, which allow smaller investors to also partake. And to put it in the big picture, if you look at the major wealth firms, you're somewhere between 1.5% and 7% penetration. And all of their targets are somewhere between 20 and 30. So we're really in the very early innings of this democratization wave.
What do you think is a reasonable allocation for alternatives in an average investor's portfolio? Like I used to think it was low single digits, but I hear RIAs tell me much higher than that.
Yeah, much higher. I think most firms are guiding folks, meaning wealth management firms that ultimately control the asset allocation decisions, to somewhere around 20 to 30%. You don't want to go to 80 or 90 per se because you need liquidity. And the whole idea is to increase that efficient frontier, have that better risk-adjusted return.
Troy Gayeski with us with us this morning. We welcome all of you across the nation, the way you listen to Bloomberg Surveillance. Good morning on Sirius XM, on Spotify. I didn't realize this. Like, we're a podcast.
Yeah.
On Spotify. It's huge in the Pacific Rim.
Absolutely.
We have a consultant, Ray YouTube, has really helped us with all this. And Ray says, it's like ginormous. We say good morning. And on YouTube, subscribe to Bloomberg Podcast. I got a new thing. I'm trying to figure out how to put out the 3 big interviews of the day the next day. Sarah YouTube's helping me.
Oh, she's smart. She's good.
I'm down in flames so far, but I'll get there.
There. Troy, a lot of folks are wondering, can we have a 4th consecutive year of double-digit growth in public equity returns? How do you think about that?
Yeah, so it's going to be a little more challenging this year, mainly given where starting multiples are and the fact that money supply isn't as excessive relative to nominal GDP as it had been. That was one of the things from a multiple expansion standpoint I was starting to get a little more concerned about. And then, Tom, as you know, when you know it, the Fed comes in and pumps in $120 billion of fresh liquidity, so you have this spread compressing. But if you look at earnings growth, it's hard to figure out how you get less than 12. Markets are...
Really? Your 12 is your base. That's unbelievable.
Yeah, well, 12 would arguably be even more of a bear case, right? So the estimate is 15, roughly, now, for the S&P. And when you think about how strong nominal GDP growth continues to be, real GDP plus inflation, revenue should be strong, earnings should be strong. And so whether it's public equity or private equity, it looks like good upside.
So it's good upside, and you're all in like Belsky is. I mean, what does he know?
Let's not get carried away with all in.
That's all in. But you're all in on the stimulus into June and July and August. Pray tell, what happens after the Trump stimulus into the midterms?
Well, so
go to cash Labor Day?
I would not recommend triple levered cash, just for the record. But if you think of the seasonality, obviously January, December are strong months, but it's very difficult for an average investor to time that, even institutions time that. So you want to be fully invested. The question is, how much do you have in alternatives to complement any downside that you could get in a correction?
Do you buy this Kool-Aid?
Well, I think the
private equity, private credit in my IRA.
Yeah, it's just the allocation. I don't have a problem with that. But some of the allocations that you guys are talking about are much higher than I would have thought. But I mean, from a valuation perspective, you can get arguably much better valuations in a private market than you can in the public market these days.
Yeah, I mean, that's one of the biggest disconnects right now, particularly in the Russell 2000. So if you think of the use case for middle market private equity in particular, it's really been a substitute or complement for the Russell, because the Russell is roughly 19 times EV/EBITDA. Middle market private equity is roughly 11. Now, our book's priced a little more expensively because of the better growth prospects, but you're effectively getting that growth at a reasonable price. And not only do you have better convexity and upside, but you also have less downside in the event we get that correction scenario.
He doesn't talk to Randall Forsyth at Barron's like this. What did you say? Convexity?
Yeah, convexity. So more upside than downside, right? That's the second derivative, as you know, of the delta. But yeah, convexity is hard to find in a market right now. But when you're at 11 times forward EBITDA, and you have 10 to 12% revenue growth, that tends to lead strong outcomes.
I mean, all this jargon, folks. Lisa just threw a gluten-free roll at him. Amid all this jargon, what you talked about that's key is revenue growth.
Yes.
If we have nominal GDP popping like it's popping, the normal industrial company making 4%, 5% revenue growth, maybe one year they get 7%. Everybody gets paid. All those numbers are bigger now, right?
Well, that's 100%, Tom. That's such a big shift from the period after the GFC, where 1.5% real and 1.5% inflation was not necessarily the new normal, but remember, it was the new normal for a long time. Post-pandemic, we've been more like 6, 7, 8% annualized nominal GDP growth. Q3, blockbuster, 8% annualized GDP growth from a nominal standpoint, and that's what drives revenue. So if you're long private credit, you're long public credit, you're long private equity, you're long public equity, nominal GDP is what drives revenue growth, and it all starts there.
So we've got 12, 13, 14% EPS growth in the S&P 500 for 2026. Is that enough for this market and this valuation, do you think?
So 22.1 times the S&P. That's obviously on the richer end of the range. The main driver of multiple expansion since October of 22, or even prior to that, is excess money supply relative to nominal GDP, and also the extraction of public equity. Remember, share buybacks always outstrip, any IPOs or secondary offerings. Plus, we're in a big merger wave, debt finance merger wave. So that should continue. But given that the excess of money supply isn't as great, I think you'd be a little aggressive to expect multiples to go from 22.1 to 23. Unlikely we get multiple compression, smidge of multiple expansion, plus the earnings growth.
I mean, I just bring up a representative toothpaste company, 21 times earnings.
Yeah.
For stuff that comes out of a tube.
Grows low singles, gross GDP.
And by the way, Tom, if I may, back to growth at a reasonable price, typically companies like that are only growing revenue like 1 to 5%. Right?
Exactly.
And so, true, in a nominal GDP environment, you'll get that's higher, you'll get better revenue growth. But these stable, mature companies can't do 10, 12, 14, 15% revenue growth.
GFC is not about Nomar Garcia Parr. It's about, the thing. So I'm in this bar in Davos years ago, and Scaramucci's pouring me a wine from the Rhone Valley, some Cava Hermitage thing that I couldn't afford. Best glass of wine I've ever had. And I turn around and Gayeski's there. We didn't see 08, 09 coming. We were sitting in that bar in Davos. We didn't see it coming. For our listeners and viewers who are going, okay, it's going to happen again, we can't see it coming. What do you tell them besides have a glass of overpriced Scaramucci wine?
Well, it's never bad to have good wine to start with,
That's good.
Especially in the evening at Davos. However, when you look at the conditions that are necessary and sufficient for a global financial crisis, remember, you had a dramatically over-levered consumer, 130, 131 debt to income. Now it's roughly 94%. Not only have we declined dramatically, but since the end of 22, consumer debt to nominal income has dropped by 8%. That's a huge number. So you have a much more stable consumer. Obviously, the housing market's much more stable as well. And the banking system is completely delevered. So periodically, this concern comes up. We think it's sub 1% probability.
I got to get this in. Ed Ludlow rocking it today out at CES. Have you been to CES?
I have not, Tom.
I have not been there either.
Yeah.
That's having the Bellagio breakfast right now. He has Mr. Wang at the 1 o'clock hour, and at 11 o'clock, he has what your MIT is all about. The leadership of AMD, Ms. Sue, grew up in Queens, really basic, ended up with she did better at MIT than you did. Okay.
She's probably smarter than me. No.
but tell us what it's like as a kid coming out of Queens, New York, the intimidation of Robert Solow and Edgerton's MIT. It just must be, I can't imagine that.
Well, I'll tell you, it's a humbling experience, Tom, right? Because typically when you go there, you've always done well in school. You've had good board scores. I hate to use this term, but you're used to being at least one of the smarter people in the room. And then you show up at MIT and it's like everybody's a genius and you're getting like overwhelmed by just the workload. Right? And I think particularly public schools prepare people well, but you're just not used to that nonstop intense activity.
The intensity.
Yeah. And then it's also very competitive, right? Because everything's graded on a curve. So it's like, whoa, you have to really mature fast and learn how to study.
Chemical engineering. I would have done like English lit. That's what I would.
No, she did. And Lisa Sue picked electrical engineering for the Challenger.
Yeah, Course 6. So Course 6,
great.
yeah.
She used to take the Wheatstone Bridge across from Queens.
Yeah.
Thank you so much for wisdom here. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
She is Senior Vice President of the Council on Foreign Relations. She is my most definitive voice on Latin America. Shannon, I have tattooed to my brain the last time you were with us, and you were hugely skeptical that we could write and that the Venezuelan people could, quote unquote, do it themselves to rebuild. Give us an update after these events. What do the people of Venezuela need to do?
Well, this is the real challenge, right? We've seen just in the last 72 hours, the new regime led by the previous vice president, now the president of Venezuela, cracking down on journalists, on any sort of opposition. We really haven't seen many protests or return to the streets, in part because many of those people have left. We have over 8 million Venezuelans who have left and are elsewhere, including Nobel laureate Maria Corina Machado, including the man who stood up for president and by all accounts won the 2024 election. So it's been quite subdued. And the guns, the repressive forces are out on the streets. So what do they need to do? They need to rally, but it's very hard to do given this current situation.
How do you rally if a gun's pointed at your head?
That's the challenge, right?
I mean, Ricardo Hausmann cut right to it, right, Paul?
Yeah, absolutely.
Right.
So, I mean, I guess one of the questions, this seems like the Trump administration believes they can exert some influence on this Venezuelan government. How do you think that can play out?
I mean, I think they can exert some influence, but we really haven't heard from the Trump administration an interest in return to democracy, right? Those haven't been the words coming from the president, from the Secretary of State. They've talked about reviving the oil industry. They've talked about, bringing stability to Venezuela, but they haven't really talked about democracy.
I got to get this question in because I need to be rude to Dr. O'Neil. This morning, have you spoken to anyone within the Trump administration of your expertise on Venezuela, Guyana, and everything south?
I have not been speaking to them these last few days.
That's half the problem.
Probably. So, I don't know, open-ended question here. How do you think this plays out? I mean, I'm not sure much is going to change here, I guess, is what a lot of people are starting to come to the conclusion that maybe not a lot's going to change here.
I think there's sort of two scenarios. Okay. One is that, as you say, not a lot changes. We have a new leadership head, but not a regime change. Lots of the other pieces stay in place as they are. Now, oil and others, there may be U.S. players who come in, though it's still kind of a shaky market and the infrastructure is very weak after years and years of sort of degradation. So one is sort of, as you say, stability continuing, new figurehead, but not a lot changed. The other is that, the current president, Delcy Rodriguez, she isn't able to keep all of these forces, right? The various different groups with guns together. And we get sort of a fragmentation, disintegration, and a lot of violence. So instability.
Have you met with Delcy Rodriguez?
I haven't, no.
Because you're the one person I think would. Delcy Rodriguez is like 28, 30 years old. She and her mother take over the Venezuelan embassy in London 1 million years ago as part of the socialist protest. I mean, she's like the real deal within the socialist.
She was chief of staff to Hugo Chavez. I mean, she has a long history with this movement.
She knows all the players.
Yeah. And she's been a player for a long time.
Right. Shannon O'Neil with us, the Council on Foreign Relations, after Ricardo Hausmann of Harvard, to brief Global Wall Street on these events in Venezuela. Paul Sweeney with Dr. O'Neil.
So one of the expectations of the Trump administration is that major global oil companies will go into Venezuela and revive their energy infrastructure, creating more supply in the marketplace, keeping oil energy prices down. But we've spoken to people saying, I'm not so sure, because that's, A, it's a lot of money, and B, it's a long-term investment, which means you're banking on political stability in that country. It's a tough bet to make these days, isn't it?
I think it's a really tough bet to make. And especially if you're a public company, if you have shareholders, what we have seen in Venezuela for the last 25 years is really the solidification, so the consolidation of crony capitalism. So if you're going in there and we're not yet disrupting some of the, the bad players, the corruption, the back and forth. So one is you need hundreds of billions of dollars in investment just to get oil out of the ground and out of the ports, right? There aren't ports that can actually do it now. But two, who are you working with? If we get to a place again in the United States where Foreign Corrupt Practices Act, where other things are being enforced, do you really want to be involved with some of these characters?
Okay, so you didn't talk to the Trump administration. I have no idea what that's about. Have you spoken to Mr. Wirth over at Chevron?
I haven't spoken with him, but I have talked with some of the people in the general energy industry.
What did they ask you?
So they care about what's going to happen. Chevron has been in Venezuela for the long haul, right? And they have gotten exemptions to continue operating. So for them, this is a good turn, right? They won't have to worry so much about these ongoing exemptions for licenses. But I do hear from others who are in this general space, both the oil companies, but also the logistics companies, right? Those who build rigs, those who do other parts. There is a worry, we're only 3 days into this. There's a worry about this stability and really does it last? And, oil companies, others, they make long, multi-year, decades-long bets.
What is the news over the last 72 hours meant for just Latin America in general? I mean, is everybody else looking over their shoulder these days? We think Cuba, maybe Colombia, and maybe even some other countries? I
mean, this is a real break in U.S. policy writ large for Latin America, for the world, right? Yep. We had a policy in the post-World War II period that was really about, if not loved, America wanted to be admired, right? We were a shining city on a hill. And now we're back to gunboat diplomacy, literally, right? Yep. Is that we are, the mighty, we are going to use coercive power, and it's going to be transactional. So all of the countries around Venezuela are thinking about that.
The global elite knows sparks are coming off the wall when Elliot Abrams and Shannon O'Neil are going at it at CFR. What is the distinction in the debate between you and Elliot Abrams?
I think the distinction here, and Elliot's one of my great colleagues, so I have a lot of respect for him. I think the distinction.
You say that on air. We know what happens.
We love Elliot. Come on. I think the distinction here is he has worked in the first Trump administration. He worked on Venezuela policy in the first Trump administration.
Did they call Elliot Abrams? I hope so. What's the distinction?
I hope they did too. I think the difference here is probably where we get and how we get there, right? And there is sort of this use of maximal force.
America wants to get to the weekend, right, Paul?
Sure.
Paul's going to Aruba.
Yeah.
Stop the show. Should Paul Sweeney keep his reservation in Aruba?
I think you're good to go now, right? The airspace is back open. Exactly. I think you're good to go.
Last weekend was a little dicey.
Yes.
So what's the next step here? I mean, for Venezuela, I'm not sure who's going to make the next step. Is the U.S. going to try to impose some policy here? Is Venezuela going to react to the U.S.? What should we be looking for?
So I'd be looking for whether Delcy Rodriguez actually consolidates power, right? We saw, last night there were videos of a gunfight happening near the presidential palace. Is that just, a one particular thing, a drone that was flying, or is that sort of a bit of a breakdown of these various? I mean, there's 4 or 5 different types of groups and militias that have guns in Venezuela. Up until recently, they've all been working together. We'll see if that continues. So I would be watching what happens on the ground there. And then from Washington, I would be watching, do we see any appetite to go beyond just the snatch and grab that we saw.
Yep.
Ricardo Hausmann spoke emotionally about his family coming from Europe to Venezuela and all the hardships of World War II. For Americans like me, like literally, I'm so intimidated by Shannon O'Neil, I got to get a map out. So Caracas is on the water, waving at Aruba and Curacao and Trinidad and Tobago.
Sure, yeah.
You go to these places, I have no life. Okay, what's the rest of Venezuela think of all this? You've got the oil to the west, the oil to the east, and then Guyana. Okay, along the water, I get it. But up in the Andes, and then down to the plains, and then the tropical nothingness towards Brazil, what do the rest of Venezuela think?
What you have seen, especially over these last couple of decades, too, especially on the borders, is really lawlessness. And on the Colombian border, you've seen, the ELN, which was a guerrilla group from Colombia, really move in and solidify. So there's a lot of contraband and illegal gold and mineral mining and the like. So there's some of those areas that are really lawless. There are other areas that, really aren't under central control. So I think a question here, it's worked well under Maduro because they've all sort of worked together, these various armed groups, and it was a live and let live sort of, kleptocratic model. The question is, what happens now? Does that continue? And this, business as usual, or do we see a breakdown?
This isn't Teddy Roosevelt and John Hay.
But maybe it is.
No, but it's not funny. You just described with all of your professionalism the violence of Venezuela. We're going to drop our men and women into this as Marines or Green Berets, or what are the modern Green Berets? SEALs or whatever.
Yep.
I don't think we are going to drop them in, and that's the thing, right? I think what we have done is take out Maduro, but I don't see U.S. troops moving in for any long term in Venezuela.
What I'm learning, I think a lot of other folks have been learning over the last several days, is there's a large number of people who have left Venezuela. Is there any kind of, organization around those people? Is there any movement of those people? Is there any maybe drive from some of that population to drive change in Venezuela? Or are those the folks that just wash their hands? And
Look, I think, Ricardo Hausmann perhaps and his family is one of these. There are many people who would love to go back to Venezuela, right? There's sort of, educated upper classes. Many live in Miami, live in other parts of the United States. There's millions who are across Latin America, especially South America, Colombia, Peru, Chile, Argentina, and the like. I think many would like to go back, but I don't yet, in talking to some of this diaspora over the last few days, I don't yet see anybody thinking that this is the moment.
Okay.
One final question, Audible. We got ISM yesterday. Michael McKee here at Bloomberg, our expert, says we're on the cusp of a manufacturing recession. Give us a Shannon O'Neil tariffs update on not, the emotion and the politics, but on American output. Are tariffs diminishing our output as McKinley faced in 1898?
Yes, they are diminishing our output. And I think the biggest challenge is that while, tariffs create a wall that create protection and a reason to produce here, all of the inputs to create those factories here are tariffed, and some of them tariffed at very high rates. Aluminum, steel, copper, the things to build the physical infrastructure, and the machines that might be imported from China, from other places. So it's hard to stand up. It's more expensive today to stand up a factory. So it's slower coming in.
We got to go to the markets. Shannon, folks, I'm a member of the Council on Foreign Relations, so I'm talking my book. Don't let Kurtz Phelan know this, okay? But you guys are rocking the magazine. I open the magazine up. Okay, Liz Economy's in the magazine. Yeah. Yep. And then the woman that replaced Liz sends me a text on LinkedIn and says, hey, stupid, I've got an article out too. Back to back in Foreign Affairs, 2 must-reads on China. I mean, they're just killing it.
They know what
Folks,
they're doing.
Get a subscription to Foreign Affairs, throw it at your bratty 22-year-old and say, shut up and read it. Bonus, Lisa, it's in a bigger font for you and me. You can actually read it.
Excellent.
Can you come back sometime soon?
Anytime. I'm just up the road.
Shannon, thank you so much. Dr. O'Neil off of Park Avenue with Council on Foreign Relations. I can't say enough about her commitment to Latin America and making us wiser and brighter over the recent years. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We welcome back, seriously, Lisa, the lightness of newspapers. What do you have?
Okay, we do. I want to talk more. It kind of flows into what we've been talking about Maduro, about the breaking news that happened and all of the deep fakes that came out when the news broke. And it kind of went
AI
into
stuff?
Yes, AI and all the fake pictures, everything that came out. Because a lot of AI generators, they have rules against, doing things like this for people creating images like this. But the problem is that you can't control it some of the time. So the New York Times...
Why can't the fancy billionaires with an 80-foot yacht, it's small, right? 100-foot yacht.
Short, yeah.
Why can't they control it?
And they can't because it's sometimes there's these workarounds for it. So what the New York Times did is that they actually went on. So they went on to like OpenAI, they went on to Gemini, they went on to the X platforms to see if they could generate an image of Maduro, and it turns out they did. So it can be done, but it's this whole question of, these companies are saying, well, it can't be done, but it's happening. And so this is the whole question behind this article is what to believe,
it's
what not
unbelievable.
to believe.
Like I'm looking at Duke winning a college football bowl game. I thought it was AI.
AI? Well, it's fake news. Exactly. It was real. So, but yeah, it's tough to, and this is the first time we've seen with real-time big news.
That's the thing. Yeah, real-time big news. I mean, there's been other stories too about, fake crowds, in Venezuela. Like you see these pictures on, let's say, your Instagram feed or wherever. And a lot of this is not real. So it's hard to determine what to believe when breaking news happens.
What's to say about the show? Next.
Okay. Paul, I have a question for you for the next story. Is golf exercise?
It's exercise. Yes, because I walk.
You do walk?
Yes.
You don't hop in the cart?
No, we have caddies. We have the jocks.
So you don't hop in the golf cart and go ride?
No, I walk unless there are no caddies, but we have a great caddy program.
Do you play slow?
I play as quickly as possible. I'm ready golf. So you get up to your ball, take a look, and swack it.
Okay, so it's exercise in your case.
Yes.
I got it. But there's a lot of people. Well, they especially the head of like Equinox, who spoke to the Wall Street Journal, who says, you know what? It's really not because you're hopping in a golf cart, you're having like a beer at like the 9th hole.
True, that's true.
You're drinking as you go.
Hot dog at the turn.
Budweiser at the 9th hole.
Oh, we do some swing oil is involved.
Swing oil.
Yep.
Oh,
loosens up the swing. A little transfusion going there. Yep. That's how you roll.
Well, they talked about this. He's basically saying, you know what, golf is not real exercise. But he talked about the whole longevity market and how big it's becoming for especially their top clients, how they're paying like tens of thousands of dollars for these top things.
20-second audible here. Do you believe, Lisa, that society has actually dramatically decreased its consumption in alcohol?
Oh, I believe so.
Everywhere?
No, most definitely. Because even when I hang out with a group of friends, you notice how some people order the mocktails because they think I'm not drinking anymore.
Right.
It's dry January, like some people do that.
How many took a gummy before they went out?
So what is it? Wet February?
That's the story.
Is it wet February?
February, yeah. Come back February.
Do you know that Jenny Cream Hills are a mocktail?
Yeah.
Next, get one more in here quick.
Okay. This is a quick one. A 535-pound bluefin tuna smash reference. Wow. Okay, it sold for more than $2 million. It's Tokyo's first fish auction of the year. It was bought by this company, Kiyomura Corp. They operate Sushi Sanmai restaurant chains. But the head of the company, he's like known as the tuna king, okay? And he says the first fish brings good luck. So
there's a picture in here in the Telegraph. This is a monster tuna fish.
It is a monster tuna fish. Yep. And like within hours, it was already being sliced up and served out at the restaurant. But I'm a big sushi fan.
You're a sushi fan?
I am.
Are you a big sushi? I'm shocked. Are you shocked?
Yes.
I'm pretty basic. I don't go, the eel and all that kind of stuff.
Do you have like 3 times a day you have sushi? Like
it's good protein. The tuna? Oh, yeah.
Protein.
Yes.
The newspapers, Lisa Mateo, thank you so much.
This is the Bloomberg Surveillance Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.